I wanted to just get your assessment on the auto sector. Day two now, some more downside, as I was just saying. Do you think that that is a pretty fair reaction, given that you've got auto analysts saying that the tariffs are going to be pretty painful ahead?
Yeah, I think it's a fair reaction, and thank you very much for having me on. I go further actually with the auto sector and say a lot of the rise that we've seen in auto sector share prices in the last year, 2 years, is a little bit of a head fake, actually. Remember, we've had a record cheap yen. Remember, we had a massive rebound from COVID, which in fact overstated demand in a way. Remember, there was semiconductor supply shortage in 21, 22 that eased in 23, 24, and that helped the sector. All of that stuff drove share prices, I think, too much in 23, 24. And what we're seeing now is a reckoning for that, as well as the tariffs. The tariffs, in a way, it's just a catalyst and a trigger for what I think is an overdue share price correction. You may think I shouldn't be so negative on a major sector in the Japanese market, but our view is that a lot of the Japanese major sector constituents, index constituents, have actually run too far for the wrong reasons. And it's time to concentrate on the really strong parts of the market, which are not necessarily the big index constituents, like the auto sector.
In terms of the Japanese automakers, though, how do you see them being able to mitigate the impact here? We know that a lot of these companies have onshored in the US. Do you see them perhaps tapping into that excess capacity? Is it even that easy to do? And ultimately, do you see that demand now showing shrinkage because of the levies?
It's the $60 million question. Certainly, those major companies, and Toyota and Nissan are the classic ones, have large US capacity and could increase that capacity, but not enough to offset these tariffs. The idea they can remove any Mexican and to a certain extent Canadian supply from their supply chain is ridiculous. They will face higher prices in the US because of tariffs. And the big question for them is, do I swallow it, or do I ask the consumer to swallow it? Presumably, they will swallow it. And that's going to be very tough. As you said just now, that there's a risk that demand anyway is going to be hit because of levies. I think there's a risk that demand anyway is peaking out, is going down for cyclical reasons. You had a major rebound in the car industry for 2 years globally, including the US, and that's slowing down now. So there are a lot of negatives for the sector, and I think it's going to be very difficult for them to cope with it. The big question for a major company like Toyota is to what extent can it consolidate and purify, rationalize its supply chain, which it's been doing anyway, to swallow some of the tariff impacts for itself. Toyota, being biggest, is probably best placed. But there is no way that they can take this impact with no effect on the bottom line. It's going to hurt. And I think the Japanese automobile sector and the companies related to it, all those supply chain companies, are in a difficult position right now. I want to highlight one company, Suzuki, in Japan, which has actually seen pretty strong share price growth this year, and certainly has outperformed the sector this year. That doesn't sell cars in America, partly because it sells small vehicles. And their tariff impact is zero. As you know, Suzuki is an India play, and that's a very exceptional company in this space.